Is HUT 8 a buy or a sell? Let's get started with the model. This is a mid-cap company, 2.7 billion market cap. They're trading at $28 a share and they have 95 million shares outstanding. HUT 8 is a vertically integrated Bitcoin miner. They were founded in 2017, based in Miami, Florida. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video, and free cash flow is cash flow from operations minus capital expenditures. They don't generate much revenue, so negative free cash flow each year. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's also negative each year, which means their expenses are higher than their revenue. Revenue is sales for the company. That's pretty much flat. Its highest was in 2023, 87 million. We estimated 4 years of future free cash flows. We also estimated a terminal value, it's all cash flows past year 4, that's 3.8 billion. We discounted those numbers back to today using the weighted average cost of capital. We're going to value the company of $2.7 billion. We divide that by 95 million shares. And we get a calculated stock price at $28.45. They're trading at $28.45, so they're trading at intrinsic value. I didn't really value the stock because I have no idea how to. I just showed you what their free cash flows would need to be in order to justify their current stock price. Do you think they'll hit 238 million of free cash flow by 2027? If so, then you buy the stock. If not, you don't buy the stock. A lot of the stock price is dependent on the price of Bitcoin. If Bitcoin goes up, so should the stock price. There are 67 companies in the same industry as HUT, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spent 122 million in CapEx, which is more than the average. Their debt to equity ratio is 0.5 for every dollar of equity, 50 cents of debt. But a company like this shouldn't be taking on debt since they have negative free cash flow, because in order to pay the interest, they have to take on more debt. They rank 28th in market cap at 2.7 billion. They're trading at 3 times book value. We can't look at their PE or price to free cash flow. They don't generate much revenue, so their price sales looks pretty weak. Their revenue is well below the average, and they're not growing. Their 5-year annual revenue growth rate is 0%. The stock is trading above its 52-week high, so you might want to wait for it to come back down. But like I said, if Bitcoin keeps going up, so will their stock price, even if they're losing money. If you put $10,000 into this company when they started trading, you'd be at $18,000 today, an 85% return. But just a few months after they started trading, you would have been up to nearly $50,000, a 400% return. So to summarize, I give them a ranking of 3 out of 10. Would I buy it short-term and long-term? 1 out of 10. I'm not a big fan of Bitcoin or crypto. Ratios are really bad, 2 out of 10. Financials are terrible, 1 out of 10. Negative free cash flow and their revenue is not growing. Let's take a look at their most recent 10Q. We'll start with their income statement. Revenue 44 million. Almost exactly doubling from last year of 21.7 million. Managed services, 21 million. High performance computing, 3.4 million. Other, 8 million. Their cost of revenue is 18 million. Managed services, great margins, 21 million of revenue. Cost of revenue, 2.8 million. In the other segments, margins aren't so great. Below that is their operating expenses, 10 million of depreciation and amortization. G&A, 16 million. Their operating expenses are higher than their gross profit, so they have an operating loss of 1.6 million. Last year, they had a loss of 665,000. They spent 8 million of interest on their debt. They have a bunch of gains in the other section, so they do have positive net income, positive 647,000. Last year, they had a loss of 4.4 million. And they're doing lots of dilution. 43 million shares outstanding last year, now 91 million. That's how they're funding their growth, by issuing new stock. Let's look at a balance sheet. 1.1 billion of assets. Their current assets are very similar to their current liabilities, so their current ratio is pretty close to 1. They have 72 million of cash, 28 million of deposits. Most of the assets are the crypto they hold. 305 million, that's held in custody. 269 million, that's pledged as collateral. Property and equipment, 190 million. If you search the 305 million, you could find out exactly what it is. That's Bitcoin held in custody. And the 269 million is Bitcoin pledged as collateral. They're not actually holding the 270 million of actual Bitcoin. It's just pledged to them. Liabilities, 386 million. The biggest, 230 million of loans and notes payable. Here's a breakdown of the $232 million. $80 million is a promissory note for TZRC. They have a joint venture in TZRC LLC, so they own that company with someone else. When I type in TZRC LLC, I get this article, Compute North files for Chapter 11 bankruptcy. This is from 2022 though. It talks about some of the subsidiaries of Compute North. They have an intricate web of subsidiaries which are laid out in the handy graphic below courtesy of Compute North's Chapter 11 filing. These entities include multiple JVs, 2 with Marathon, plainly dubbed Marathon Compute North 1 LLC and Marathon Compute North 2 LLC, and 1 with public renewable energy company Next Era Energy, TZRC LLC, of which Compute North owns 50%. Look at the interest rate on that note, 15%, and they pay even more on this note, 18%. That's how high a credit risk this company is. They have a $65 million note with Coinbase, 11% interest, and a Co2 note, $152 million principal, 8% interest. They entered into a convertible note purchase agreement with Co2 Tactical Solutions. So if the stock price goes up a lot, this company will convert that debt to equity. But if the stock price doesn't go up, then Hut 8 will have to pay the principal on that note. Assets minus liabilities equals equity, $700 million of equity. They raised $620 million from selling their business, selling stock. They profited $79 million from running their business. I'm shocked they have positive retained earnings because last year was negative $100 million. Oh, I guess this is why they have positive $169 million of net income. This is the main reason. They had a gain of $200 million on digital assets. So it looks like they sold Bitcoin at a gain. I wish they talked about this more so I knew exactly what it was. Let's go to the statement of cash flows. In the operating section, a cash outflow of $47 million. Because that gain has to be subtracted out on this section. I guess it was a non-cash gain. Maybe it was a paper gain. In their investing section, that a cash outflow of $60 million. They purchased $78 million of PP&E. You need some heavy-duty computers to mine Bitcoin. In their financing section, they added $150 million from a note, $15 million from a loan, and $21 million from covered call options. Risky stuff. They paid back $34 million on loans. So in their financing section, they had a cash inflow of $150 million. Let's look at their third quarter presentation slides. Revenue doubled from $22 million to $44 million. They had positive net income, positive $900,000. Last year, they had a loss of $4.4 million. EBITDA went down a lot. It was $11.5 million last year. Now it's $5.6 million. This is just for the quarter. And they use a lot of energy, but that's gone down from 4 cents to a little under 3 cents. Here's a total energy, 1,322 megawatts. They have 205 megawatts under development. That falls under their CapEx spend. Here's their pipeline, 5 gigawatts. They're currently building a next-generation energy infrastructure platform. Construction underway at Vega. Their Vega site is in the Texas Panhandle. This is not a typo. You might have thought this was Vegas. It's Vega. They mined 234 Bitcoin in the quarter. Last year, 675. They have 9,106 Bitcoin on their balance sheet. That's a value of $577 million. The cost to mine a Bitcoin, $32,000, which is a lot lower than the current price of Bitcoin. Here's how they come up with their EBITDA. You start with your net income, then you add back $8 million of interest expense, $10 million of depreciation and amortization, and then you subtract some items. They subtract $14.5 million of non-recurring transactions. They define that down here. Non-recurring transactions represent $13.5 million from a termination fee received from Mara, as well as a release of relocation fees that were over accrued in the prior period. Let's look at Simply Wall Street. Its last price, 2.7 billion market cap, up 10% in the past week, up 150% in the past year. Bitcoin has been going up a lot, so of course the stock price has to go up. It looks like it started trading at the end of 2023 at about $10, $11. Its low point was $6.72 in the beginning of this year. It was still below $10 in September. It peaked at $28.45 just a few days ago. No valuation from Simply Wall Street. 6 analysts priced this stock at 33. They say it's undervalued. Their revenue projection for 2026 is $741 million. Their revenue back in 2021 was only $7 million. The following year, it broke $100 million. Then it came down to $63 million. That was in September 2023. And it's almost $200 million currently. This is for the trailing 12 months. They pretty much had no debt in 2021, $250 million in 2022. The peak was $328 million in mid-2024. Now it's $300 million. But their equity is a lot higher than their debt. Equity over $700 million. Most of their equity is the Bitcoin, because equity is assets minus liabilities, and their main asset is the Bitcoin they're holding. And they only have $72 million of cash on their balance sheet. The CEO's salary was $250,000. Now it's $265K. Total compensation $1.7 million. Tenure as CEO less than 1 year. In the past 12 months, there's been only insider selling, no buying. Look at this person, sold it for $815. They're probably kicking themselves right now. Half the company is owned by institutions, 30% by the general public, 11% by insiders, and 10% by those nasty hedge funds. Co2 is the biggest shareholder at 10%. Then BlackRock, Michael Ho. Marathon's digital oopsie. The great Michael Ho debacle. Marathon was fined $138 million for breaking contract with Michael Ho. His growth plan for Marathon included a major Bitcoin mining facility in North America. Marathon Digital executed Ho's strategy but didn't pay him. The CEO owns 3.25% of the company. Geode, Lone Pine Capital, Schwab Murray Asset Management, Alieska Investment. Their employee count went from 113 to 219. The ticker trades on the TSX, Nasdaq, Mexican Bolsa, Deutsche Börse, and Buenos Aires Stock Exchange. So if you want to learn how to build a discounted cash flow model, I show you step by step in this video in the top right corner. Make sure you email me and I could send you a version for free while supplies last.